So the 2026 market is kicking off in a really strange way. I mean, on the one hand, you've got stocks rallying and risk assets getting snapped up like crazy. But on the other hand, the world's ultra wealthy, they're making a completely different and very, very quiet move. They are piling up cash. In fact, they're building what they call their ammunition for the next opportunity to the highest levels we have ever seen on record. Now, here's the thing. It's not because they're pessimistic. It's actually the exact opposite. They understand that a critical moment is coming, and it's coming fast. A moment where only one thing is going to matter. They believe that in 2026, only real, tangible profits will survive what's coming. So in this explainer, we're going to unpack all of it. The Venezuela intervention, what's going on with interest rates, the jobs report that has everyone on edge, and use it all to answer that one huge question: why is the smartest capital in the world choosing to sit on the sidelines? You know, the year really did start with a bang. After 2025 ended on a bit of a down note, the markets just came roaring back to life. The Dow Jones was leading the charge, which seemed to signal this big rush back into more traditional, established companies. At first glance, it looked like pure, unfiltered optimism. But this is where the paradox really smacks you in the face. What's so wild about this slide is that these three things, they almost never go up at the same time. You have stocks, a classic risk-on asset, rallying hard. But at the exact same time, you have gold, the ultimate safe haven, also surging. And then, to top it all off, the VIX, which is literally Wall Street's fear index, is climbing right alongside them. This isn't a picture of confidence, it's a picture of a deeply confused and divided market. So, while the trading algorithms and retail investors were busy buying into this rally, another, much quieter group was doing the exact opposite. And believe me, when this group makes a move, you really want to pay attention. We're talking about what insiders call the smartest capital. You know, these are the family offices, the huge institutional investors, the people whose massive scale gives them this incredible bird's eye view of the entire financial landscape. And right now, their big move is to trim their stock positions and hoard absolutely unprecedented amounts of cash. Which brings us right back to the central mystery we're unpacking today. Why? Why on earth are they stockpiling what they call ammunition, right when it looks like the party is just getting started? Well, to understand their logic, we first need to look at the event that's fueling all this excitement on the surface. And that catalyst was a geopolitical shockwave that really hit the markets out of nowhere over the weekend. An event down in South America that, on its face, looked like a huge, huge win for the energy sector and really the market as a whole. It all went down over a single weekend. The U.S. military conducted this swift operation in Venezuela, which led to the detainment of President Maduro. The White House then announced it would assume temporary control and, this is the crucial part, grant American oil giants like Chevron and Exxon the rights to develop Venezuela's massive but long-neglected oil infrastructure. And the market? Oh, it absolutely loved it. It didn't see a messy, drawn-out conflict. It saw a controlled event that promised to unlock the world's largest oil reserves. Naturally, this sent energy stocks soaring and helped crude oil bounce back hard after getting hammered in 2025. This is the bullish story that kicked off the year, but it's not the whole story. So let's move on and talk about the cracks that are starting to form just beneath that bullish surface. Because when you really look past the headlines, you see a battlefield of conflicting signals. And this slide right here perfectly illustrates the market's split personality. On one side, you have the bulls, right? They're pointing to the energy boost, a strong financial sector, even a crypto rebound. But on the other side, the bears are looking at that rising fear index, the surge in precious metals, and one very specific, very worrying piece of data that's just on the horizon. 57,000. Let that sink in for a second. That's the consensus forecast for the number of jobs added in the December employment report. It's a weak number, and it represents a huge test for the market. It could determine whether the Fed feels confident enough to keep cutting interest rates in 2026, or if they have to slam on the brakes. So, with this deeply conflicted picture, we can finally return to our central question and reveal the playbook of the smartest capital. What is it that they see that the rest of the market might be ignoring? Okay, so here's the crucial point. They aren't just looking at the Venezuela news. They're looking at the whole board. They see stock valuations, especially in tech, stretched to historic highs. They're worried that the AI hype from 2025 has created a bubble where excitement has run way, way ahead of actual profits. They believe that the era of just buy anything and watch it go up is officially over, and they see the real potential for this geopolitical risk to spread. And all of that leads to their very clear three-step strategy. First, they're trimming their stock holdings. Second, they're moving that money into cash and short-term bonds, creating that record-high ammunition pile. And third, they wait. They are patiently holding that ammunition, waiting for what they see as an inevitable market correction, one that they believe will separate the hype from the companies with real, durable profits. And that is when they plan to strike. So, how do we translate this high-level strategy into something practical for navigating the rest of 2026? What is the key takeaway from all of this? The most important lesson here is this: 2026 is not 2025. This is not going to be a year for blind optimism, where a rising tide just lifts all boats. It is shaping up to be a year of careful selection, where focusing on the fundamentals is going to be everything. So what does that actually look like in practice? Well, it could mean rotating out of some of the most overvalued tech names and into sectors with more reasonable valuations, like energy and financials. It might mean hedging your bets with a small allocation to gold or maybe even Bitcoin. And when earnings season kicks off, it means focusing relentlessly on actual profit growth, not just hype. Finally, keep your eyes glued to that jobs report. It is going to set the tone for the months ahead. Visually, a more defensive yet opportunity-focused portfolio might look something like this. Notice the slightly lower allocation to stocks and that pretty significant 15% slice for cash and short-term bonds. That right there, that's your ammunition, ready to be deployed when the right opportunity finally appears. It all comes down to a shift in mindset, really. Patience and discipline are going to be the most valuable assets this year. In this kind of environment, cash is not trash. It is a strategic tool. It is the ammunition you hold in reserve for when quality assets finally go on sale. So now you have the playbook. You've seen the conflicting signals, you've seen the underlying risks, and you've seen the patient strategy of the world's most sophisticated investors. The question is, what will your first move be? Let us know what you're thinking in the comments below. And if you want to stay ahead of the curve, make sure to subscribe for more explainers just like this one.